Am I though? Yep, test. Yep, test. This fucking market is so strong. 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 Wow. All right. Wow. All right. Wow. All right. Wow. All right. You can hear me, right? I'm gonna get started. You can hear me, right? Okay. Okay. Let's get started, everybody. Okay. Okay. All right, sorry about that. Let's do it. So real quick, just disclosure here. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer. So real quick, member disclosure here. I am an associated member of you should carefully consider whether trading is suitable for you in light of your own financial condition. I am an associated member of you should carefully position disclosure. These are the positions that I'm currently holding. I'm speaking today. I have some shorts on. The only one listed here is this TQQQ, speaking today, which is a 3 times bull NASDAQ ETF. NASDAQ showing relative weakness today, so it's playing out okay. But I also am long a couple bearish ETFs, so they're inverse ETFs. So they're long positions, but they're basically short bets on the market. A couple bearish ETFs, so they're inverse ETFs. So, but I've started comparing down those positions a little bit. We'll talk about when we review the charts. Just quickly about me, I am senior trader and registered principal with T3 Trading Group. I run T3's Manhattan trading floor. Quickly about me, to be open. I am not the senior trader and registered principal with some months now, just because of the coronavirus. But everyone is working remotely, which is a cool opportunity. I actually drove to Wyoming last week, but because why not? Which is a cool one of the awesome things about trading professionally is you're not necessarily handcuffed to one of the awesome things about trade anywhere in the United States, possibly anywhere even in the world. So it's just a great opportunity, and my wife and I figured why not? Let's drive out there and work from home wherever we want home to be. So I've been with the firm since 2010. My wife and I figured why not? Mentored well over 100 traders. Currently managing a group that's probably well in excess of 50 traders. And then my spare time I've always been involved in martial arts, and I actually used to compete kickboxing at a professional level. Questions are really welcome, so you guys can put questions directly into the chat here in YouTube, and I can see those and I can answer them. Questions are really welcome, so you guys can put questions directly the broadcast today. But you're also welcome to reach out to me. Reach out to me with trading questions. Reach out to me with questions about T3 Trading Group. Reach out to me with questions about anything. You're also welcome to reach out to me. I'm here to help. Reach out to me with trading questions. Reach out to me with questions about T3 Trading. Let's go to the charts. Reach out to me because this is always what I want to actually spend my time talking about. Trading questions. Reach out to me with questions about T3 Trading. Let's go to the charts. Reach out to me. Okay. So here's a 5-minute chart of the SPYs. Here's yesterday. Here's today. We got to start big picture. All right. So what I want to do today is first, I'm just going to talk about the market as a whole today because it's obviously really important. And then I want to talk about one specific trade from yesterday that I was involved in and a lot of the members of my team were involved in because I think it's a highlight some great lessons on what we're looking for when we approach the market. So first of all, let's talk about the market because this market looks so bullish. What we're looking for today so far far has been a very boring sideways day with a very tight range. But we got to talk about the big picture here. So first of all, here's your coronavirus crash. Here's your coronavirus recovery. That recovery really starting on May 18th started to look less healthy to us because this move higher here from May 18th through June 8th was primarily a short squeeze. And we were able to tell that in real time just by having an understanding of relative strength and relative weakness, and by having an understanding of institutional positioning. Institutional positioning is something by having really try to pay attention to as pro traders, just because you know how the institutions are positioned based on what the market is doing. As pro traders, have an understanding of what they're most likely going to do next. And if you understand what the big money is most likely going to go do next, it's like if I gave you the winning lotto numbers for tomorrow, are you going to go play them? Right? That's kind of how I describe it. And obviously, everything we do in trading is based on probability. For tomorrow, thing is 100% success on any trade, but we were able to tell in real time that the last leg of this rally here was primarily short covering. And now, more recently, we're seeing the data come out that shows that this move right here was the third largest short squeeze on record. Shows that after that short squeeze completed itself, there's a really big jobs number here on June 5th that led to the last part of the squeeze. Here's an island top. This day here was Fed day, so Fed came out, they met expectations. Sometimes meeting expectations is not good enough. Closed the gap down, we sold off. What this move led to, so in trading, markets work in periods of expansion and consolidation over time. That's how markets work. This period from this low through the short squeeze high was a period of expansion. And when you have big moves over the shortish periods of time, markets get extended. That's the term that we use to describe a market or a stock that's had a big move in a short period of time. And there's a couple things you need to know about extended stocks. First of all, they can become more extended, right? And there's a couple things you need to know about extended where there's heavy volume, sort of event going on. More extended. There's no such thing as a market being up too much or down too much. But we pay attention to extension in the market when we're trying to figure out positioning. So after this really big move, and the market got extended, markets that are extended eventually need to correct. There are two ways in which a market can correct: time and price. Price means that market retraces a percentage of that up. Time means that the market goes sideways for a while. So what we saw after the short squeeze rally kind of concluded here after about June 9th was a correction primarily through time. A little bit through price. You can see that there was a pull in here from highs of 323.41 in the SPY. SPY, by the way, I assume everyone knows the ETF that represents the S&P 500. Highs from 323.41 down to a low of 296.74. Personally, I was actually looking for a little bit of a bigger price correction down to closer to 292, 290, that area. Personally, didn't happen. I was actually looking for a little bit of a bigger price correction. A lot of this correction turned closer to a time correction. We went sideways. Didn't happen. It's a consolidation. And technically, it's a bullish consolidation. It doesn't necessarily mean it has to break out. There's going to be signals within the consolidation that can tell you the direction in which that break is most likely going to occur. It doesn't necessarily mean it has to break out. There's going to be signals within the bigger sideways consolidation. And then we started to sideways consolidation, and then we started to just the broadcast, yeah. And then we started to just the broadcast. I'll just close out the YouTube. Is that better? Okay. I'll keep pushing on. Sorry guys, I just got a call from tech here that was telling me that I was having some double sound issues. Hopefully that corrected it, what I just did there, but now I'm not going to be able to read questions if any questions pop up. So sorry about that. Like I was saying, so basically, recapping the market here, and now what I want to talk about is why the market looks so bullish right now. I got really bearish here into beginning to mid-June because we could see the internals, right? The internals was your short squeeze. That's not a healthy market. And then that led to, a really solid pullback, sideways price action. And within this range, what I was saying here on the way up, what I was saying here on July 6th, is I couldn't think of anything more bullish after this little rally to the top of the range than if we consolidated at the upper part and made a lower high. So right here is your lower high. This pullback to 310.68 is your clue that the range is going to break out to the upside. And that's exactly what happened. Honestly, it was a little bit tricky because this day here on July 13th was kind of a fake out day, with potential breakaway gap failure. And then, a few days later, last week, we really consolidated the upper end of that range. And then yesterday was so bullish. The NASDAQ, which has been the strongest of the indices, the NASDAQ here had its biggest day yesterday in 3 months. And that is with what it's done on the way up, right? It's just been this incredible bull rally. And then yesterday had its biggest day in 3 months. It's massive, right? You can see the intraday trend here, right? This is yesterday's price action. This is a perfect 5-minute uptrend. Perfect 5-minute uptrends in the market actually rarely exist. It's much more likely you get a bigger time frame, 15 minutes that lasts for a day, something like that. The 5-minute itself is something that tends to not happening, tends to actually break at some point during the day. And that was just an incredible, incredible day. And we talked about it going into yesterday. We talked about how bullish this setup is. And I'll tell you why it's so hard. So first of all, news. I am a big believer in taking a look at news because news can give you a thesis for expectations for the market. But the technicals are the most important thing. It's very specifically the technicals that tell you how to act. So I actually had a bearish thesis on the market, but guess what? The technicals are bullish. So which side are you better off being on? You're better off being on the long side of the market because that's what the market's telling you. Another important signal for everyone to know about markets is how it digests news. What we have seen recently is whenever bad news comes out, the market doesn't really go down. The market goes sideways, down very small on bad news. But a little bit of good news comes out, a little bit of positive coronavirus vaccine news, more stimulus news, and the market explodes. That's the sign of a bull market. When the market is able to ignore bad news, but just eats up all the good news that's out there. So you have all these signals that are just really bullish. And then the final thing that we've really been watching, which finally triggered yesterday, and I've spoken about this in the webinar, I think last week, is the VIX itself. So the VIX, which is an index that measures volatility, I've been talking very consistently that if the VIX starts to get below $25 to $26, that could lead to a new wave of money rotating into the marketplace. And again, this is about understanding institutional positioning, which is something that my team and I are constantly talking about. So there's been a huge divergence in the VIX and the market right now. And I can show it to you guys very simply. So let's take a look at one day like a week ago. Let's just look at July 14th. July 14th, the VIX is at about $31. Let's take a look at the SPYs. July 14th, the SPYs here, let's just say they're at 318, somewhere around the midpoint of that day, or 317. When, before coronavirus, were the SPYs last at 317? SPYs were at 317 in mid-December. Where was the VIX in mid-December? The VIX in mid-December was at $12.50. So, at the same S&P price, The VIX in December is at $12.50, and the VIX on July 14th that we just spoke about is at about $30 or so, $31. That's a huge divergence, and we understand institutional positioning and how institutions, automated, quantitative funds that are out there, they're just trading based on models, right? And one of their models is probably going to say, or has held them back, I should say, from getting very heavy to the long side because they're afraid of the potential of this volatility as indicated by the VIX. So if the VIX, if then, right? So one of the ways in which I like to look at markets is in terms of if then statements. If the VIX starts to hold below 25 and 26, then those quantitative funds may start to re-leverage into the market and put a lot of that cash in the market that's been sitting on the sidelines. One of the biggest bull cases for the market right now is the amount of cash that's on the sidelines. There's a lot because there has been tremendous fiscal stimulus, monetary stimulus, and there's nowhere for that money to go. It's not going into bonds. There's no return on bonds now. It's going to potentially plow into the market. So that's one of the big bull cases that's out there. So just looking at all those things, understanding the technicals, recognizing that the technicals are not, confirming any bad news. The market does not care, at least right now, does not care how many new people get the virus, how many people die, unfortunately. It's grim, but it's true, and these are things we have to pay attention to with markets. Doesn't care if that's on the rise or on the decline. The market doesn't care if China-U.S. relations are getting sour. The market has shown us recently it does not care about any of those bad things. But when good news comes out, more potential stimulus, coronavirus vaccine, the market rips higher. Again, all that's bullish. So now with the background of that, so that's the market itself. With that said, I just want to highlight one trade from yesterday because this trade worked, which is not the reason why I want to go over it, but it's the reasoning behind it. So first of all, I'm going over a trade that worked. I just want everyone to be 100% certain. Not every trade that I take works. And in yesterday's afternoon meeting with my team, I actually spent a lot of time talking about that. So I had a whole bunch of trades yesterday that failed. But my risk management approach on all of those trades made it so that I lost money really only in one of them. One of them was just a straight loser, and all of the other losing trades I had yesterday were break-even trades. And again, this is stuff that I discuss with my professional team when it comes to game planning. So, reach out to me if you want to be part of the professional team, and you can learn about that. It's not what I'm really here to talk about. I'm here to talk about one specific trade that actually worked. So again, by having good game planning skills, I could have 5 trades that fail. 4 of those 5, and this is just about true from my numbers yesterday, 4 of those 5 are basically break even. 1 was a straight failure, and then the 6th trade is the trade that basically really works. That's not the order in which that happened. Twitter was actually the first trade I put on yesterday. So Twitter, let's start by looking at the daily chart here. So first of all, on this day, on July 8th, Twitter announced that they are exploring a potential change to their business model, which would be making it a subscription service that you would have to pay a fee to get access to potentially some of Twitter's top people out there. And if you know anything about the background story of Twitter, first of all, Twitter has dramatically underperformed Facebook since its IPO. Twitter is below where it was trading on its first day still. Right? Whereas if you look at Facebook, over the same period of time, Facebook's gone from $40 to $250. So Twitter is massively, massively underperformed. And a lot of people have spoken about why. And we know that recently there's been an active investor who got on board, and I believe he was able to take over 3 places on their board. And just doing my research, one of the people I listen to is this guy, Professor Scott Galloway, who is an NYU professor. I listen to his podcasts. One of the things he was talking about, even prior to Twitter announcing it, was, wouldn't it be great, and I still have a position in Twitter right now just to disclose that, wouldn't it be great if they changed their business model in such a way where they can actually monetize their users better by making it a subscription service? Well, guess what? It's basically what they announced on this day on July 8th. So it had this explosive candle, very high volume. Whenever you have a very high volume candle like this one, the low of that candle becomes very important going forward. If it ever breaks that low, you know that every single person who just bought on this day, and there's a lot of them, just look at the volume, would be out of the money, and that idea is failing. So the market showed a little weakness. This thing tried to set up, but the market showed some weakness, which caused Twitter to pull back. I actually first started buying it in a small way on this day, July 14th, kind of as a swing trade. And I was looking at this thing saying to myself, well, how do I get heavier? I believe in the idea. I have a thesis. Are the technicals confirming my thesis? 1. And 2, how can I get heavier in a responsible way? Well, this $36 has really started to establish itself as a level, right? You can see here, even though it's ticked above, it's never been able to close above. And then these highs here, so you have like an ascending triangle pattern and a bullish consolidation in front of these levels of resistance. So that's the technical setup here. And now going into yesterday, it was set to open up just below that $36 level. So this trade is a very simple breakout trade. And I can go over the mechanics behind how a breakout works, but what I really want people to understand is all of everything else that makes this a good trade. The bullish daily chart, the news thesis, the strength in the NASDAQ itself yesterday. These are all the different layers of probability that come together for any one particular trade that you need to pay attention to. Trading is not binary. It's not, let me just look at this 5-minute chart. Oh, here's a little bull flag or here's a little candlestick and I'm going to trade off that. That's binary thinking. Trading is much more in depth than that. It's about seeing all of these different things, understanding multiple time frames, understanding the qualitative fundamentals, and then breaking that all the way down from that big picture stuff to the smaller picture on how to execute. So $36 is a resistance level. So it's a very simple breakout trade. So this is 2 days ago. This is, I guess, last Friday. This is yesterday. And this is today thus far. Gapped up really big and sold off and filled that gap today. But yesterday was the trade. So basically right at the open, I'm buying $36. It's a momentum breakout trade. All I did was put a buy stop at 36. And I had a lot of conviction in this trade. Why? Because of everything I just went over. All that big picture stuff. So what I'm looking to do is I am looking to try to get daily chart reward. Where could Twitter go if it really works out great, right? So I know that there is a level here at 36. That's what I want to buy. There's another level here at 37 from this high and this high. After 37, I've got some levels up here around 39 to 39.50. After that, nothing until 44, 46. So what I am looking to do here is implement small time frame risk for potentially big time frame reward. So again, the trade is a simple breakout trade. This is the first thing, if you're a trader of mine on my professional team and you're going through the training program, this is the first trade I ever teach, basically, is how resistance works, shorting off resistance and buying a breakout. And all this is a simple breakout trade. It's a momentum trade, so I'm not providing liquidity, I'm taking liquidity. I just put a buy stop for the amount of stock that I wanted to buy at $36 because that's the level. And my out on the trade is going to be the low of the ignition bar. Ignition bar is the term that we use to describe a 5 or 15-minute candle in which a bigger picture time frame breakout occurs. So this first candle right here also happens to be the ignition bar. Ignition bars should be characterized by high relative volume. Now it's a little bit difficult to tell relative volume on the first bar and the last bar of the day, because the first bar and the last bar of the day are always on higher volume because they settle the opening and closing imbalances. And if you don't know what that is, I'm not going to go into a detailed explanation of it today. But for our purposes, just realize that it means that there's a lot of extra volume always in the beginning of the day. But this was still a lot of volume on that ignition bar. It broke through 36. My out on the trade, so I bought, my buy stop on 36 actually got me some slippage. So I got like an average price of probably 36.07, something like that on the entry. And then my out was just 1 penny below the low of the ignition bar, 35.79. So I've got about 25, 27 cents risk on the trade, and then it worked. And honestly, the fact that it worked isn't what's important. It's the process. It's the rules-based approach to put yourself in the position to make money. It's starting from the big picture and working down to the small picture. It's understanding all of these different layers of probability. That's the term that we use to describe all the different things in the marketplace that can potentially affect any trade, and how there were so many of them on the side of this trade that I highlighted. The market, the big picture, the news thesis, relative strength in tech, etc. And closed on highs. So now it's a with trend trade from a game planning perspective. I'm always going to be more greedy on with trend trades. And what's my target on the upside? Guess what? I don't have one. Why should I? Maybe it comes down and it fails, right? So I sold, some of my position yesterday. I sold some into the close. I actually sold a little bit more into this morning's gap up just because the gap up was so huge. And I didn't trust that tech wouldn't necessarily pull in, which is why I'm short TQQQ today. But outside of booking a little extra profit for myself, what's the plan with this trade now that I'm in it? Well, now that I'm in it, whereas even though this started with just 20 cents risk or 25 cents risk, I am willing to give a percentage of my position all the way back. It was at $38 at one point this morning. It means I'm willing to give it back $2 as of right now to that out. And eventually I hope to implement my trailing rules. Again, rules is the key to the business. My trailing rules on a bigger picture, if it allows me to. But as of right now, I'm willing to give this thing back $2. Because, maybe I give it back that $2 and I end up getting stopped out of this position and I make a little bit of money. Or maybe this breakout leads to a trend and the company changes its business model and they report great earnings, and it starts to trend its way back up, and it gets back to these 44, 46 resistance levels, and maybe it clears those, and maybe this stock eventually works its way up to $70. What is the probability that I bought Twitter at 36 yesterday and I catch a move to 70? It's low. It's low. But guess what? My rules are putting me in the position to make it if it can give it to me. And that is the overwhelming risk reward that I'm looking for as a trader. And I have had successful trades over the course of my career that started just like this. 20 cents worth of risk, next thing you know, 100% move, 150% move in real companies like Twitter. And that's what I'm trying to do consistently, put myself in the position to make money. I had 5 trades fail yesterday. 4 of them I lost nothing in. 1 of them I lost my risk. And then I had a 6th trade here that worked out really well. And if this becomes that trade that, works like magnificently well, that's how you make money, right? So 85% of what I'm doing is managing risk. And then maybe 15% of what I'm doing is maximizing reward. And that's what we're looking to do as professional traders. So that's really all I wanted to go over today. Just a review of what the market's doing overall on one particular trade, because I really felt like that highlights a lot of what we're doing as a team. Communication amongst my team is really important to me. So even though this trade was my idea, a bunch of my other traders were involved in it with me. And the opposite happens also, right? My team yesterday also provided me some good ideas on trades that I got involved in that could potentially make me money as well. That's the type of team environment that we're really looking for. So if you want to become a part of that team, you already have my email address. It's going to pop up there at the end. T3 Trading Group is traditionally a proprietary trading company. We also have retail accounts as well that are really professional. So if you're interested in those retail accounts, you can email me as well. I'm just going to talk about prop trading here with T3 briefly. T3 Trading Group is one of the largest proprietary trading companies in the United States. We have over 500 licensed professional trading accounts here at the company. We have offices, New York City, Atlanta, Georgia, Boca Raton, Florida, a couple in New Jersey. The Manhattan office is our headquarters. That's where I am typically working. Again, right now, everything is closed. I went to Wyoming. I'm trading here in Wyoming. Why not? I'm a city boy. I grew up on Long Island. I've been living in Manhattan since 2004. I've never been in the state of Wyoming before. I got these bucks, like these deers with big antlers. I've hardly ever even seen nature. Eating the shrubs basically in my front yard right now, so I'm having a conversation with you guys. It's been pretty incredible, but that's kind of the freedom of being a trader. You can basically trade from anywhere. With that said, we can actually only work with U.S. residents right now. So unfortunately, if you're not a U.S. resident, you can participate in some of T3 Live's educational courses. Eventually, I'm going to do probably another one of these boot camps that was really successful that I did a couple weeks ago that you could participate in. But to actually be a trader with us, you got to be U.S. based. We have traders all around the country. From a licensing perspective, T3 is an SEC registered broker-dealer and member of FINRA SIPC. So all of our professional traders, not our retail traders, all of our professional traders have to be licensed. You have to pass the SIE, Security Industry Essentials, and Series 57 examinations in order to trade with us. Before you even get to that process, you have to do registration paperwork and a background check. For the exams, we will sponsor you for the exams and we'll provide you with study materials. We sign all of our incoming traders up for an STC study program. You get textbook, online classes, online practice tests. After you pass the exams, then you can trade. We have 4 different trading software options available: Lightspeed, Fusion, Sterling Trader Pro, and Wolverine, also known as WEX. On the retail side, it's really only Sterling Trader Pro. It's an excellent software. So you can reach out to me if you want any more details on that. On the prop side, traditionally T3 Trading Group was an equities trading firm, and that's probably where the majority of our trading still lies. I personally am only an equities trader with the firm. We also have futures, we have equity options. I think we have options on futures as well. So if you have an interest in any of those businesses, reach out and I can either speak to you directly or have a member of my team speak to you about what you need to know. I've got guys on my team that are entry level, and I've got guys on my team that are experienced. Guys who are just getting their career started and guys who have been trading for decades. For the entry-level people, training and development is key. And I have spent a lot of time developing tools for my incoming traders so that they can have access to as much education and training and mentorship as possible. So all of my incoming traders, regardless of experience level, they get free access to my virtual trading floor, the Pro Desk Room. I broadcast a morning meeting at 9 a.m. Eastern every day, an afternoon meeting at about 10 after 4 every day. The morning meeting is about idea, information, research sharing. The afternoon meeting is a review, but it's an educational review. I'm trying to pull out specific lessons from the market on a day-to-day basis that we can all focus on. Incoming traders also have access to a training program that basically consists of a series of lectures when they're first getting started. So all that's really important, I think, in the beginning of your career as you're developing your edge, you're developing your rules that will hopefully generate consistent profitability for you. In order to trade with us, you do have to commit a capital contribution. That's going to go to back your initial trading risk. It's a first loss system. And what we typically do, it depends a little bit on the situation, but we typically start by providing buying power at about 20 times for day trading and 8 times for overnight positions of your capital contribution. So for example, if you deposited $50,000 with the firm, we may allocate you $1 million to start working with. There's no desk fees that you need to be aware of. All the education, coaching, everything I spoke about is free. I don't charge anybody for any of the training that I do if you're a professional trader on my team. I do for some of the T3 Live folks, but the professionals, if you're a professional trader and you're on my team, my only goal is for you to be as successful as possible. That's what I want. So I'm going to do whatever I can on my end to try to get you there. And experienced traders also. Again, I got a lot of experienced traders on the team. Some guys have been trading for decades, former floor people, former pit people. T3, I believe, is the largest or one of the largest proprietary trading companies in the country. We're also very well capitalized. So giving access to buying power is not a problem for us. The biggest thing that we need to assess is risk. But if you're an experienced trader and you have a specific set of strategies and you want to allocate us, contribute, whatever, a few $100,000, but you're looking for access to, 20 or 30 million in buying power, it's something we can potentially do for you. Again, the biggest thing on our end is being comfortable with the risk that you're putting on. So risk management, like I repeat all the time to all my traders, is the most important part about this business. And you get a bunch of stuff for free if you become a professional trader with us or a retail trader. You'll still get this. You get Pro Desk Room, Trader Hub, Scott Ruther's VTF room in addition to my VTF room. Red Dog, he's the Chief Strategic Officer of T3 Live, I think. Awesome guy. I've learned a ton from him over the course of my career. You get his all access as well. So, again, we're just doing everything we can to try to put our team members on our professional team and our retail traders in the position to be as successful as possible. And here's my email address. So if you have any questions, I apologize. I was having an issue in the beginning of the webinar today, and it was just a little tech issue. Like I said, I just drove out to Wyoming last weekend, so my tech setup here was a little bit different, and I guess that kind of created that issue, so I apologize about that. But reach out. Here's my email address. Reach out to me. Happy to go over anything related to T3 Trading Group, prop trading, trading in general. This is the stuff that I love talking about. So, thanks, guys. I am going to jump back to my trading. And again, I apologize. I cannot see the YouTube right now to let you know if there are to answer any specific questions, which is usually what I like to do. So I'll get that fixed for next week, and I'll see you guys then. Happy trading.